Hi, my name is Luis Felipe Sepulveda. We are going to talk about the costs managed manufacturing, commercial, and service organizations. First of all, the objective of financial accounting. This is so important to know the financial situation of a company. Also, you can know business investment thanks to that, and levels of indebtedness, equity participation, evaluating changes produced in the capital as a result of operations. This is obtained by comparing income with costs and expenses. You can find this in the income statement, where you can see the income, expenses, revenues, and all about this. Now the cost accounting objective. This is an information system to predetermine, to register, to accumulate, to distribute, to control, analyze, to interpret, to inform the production, distribution, administration, and financial costs. It provides information to determine the cost of sales and to be able to calculate the profit or loss of the period. Determine costs of inventories. You can find this in the balance sheet, in the file of inventories. This is so important too for financial situation of a company, to know that. It provides information to exercise proper administrative control and facilitate decisions, facilitating the development and implementation of business strategy. Now this is the accounting and administrative. This is an information system that facilitates the internal functions like controlling and planning. It also helps to take decisions in a company because it has more details than the other ones. You can find in an easier way the expenses, costs. It facilitates in this way the manager's job, for example. Other function of this is encouraging managers to carry out in short-term and long-term strategic planning, allowing administrative control with a feedback tool. Information is used to help answer questions related to administrative and economic management performance. Now, what is the difference between costs and expenses? Okay, cost is directly associated with the product, for example, raw material, labor, direct labor, and expenses are not associated with the product. It's necessary for a company, but it's not necessary. For example, computers, phones in the administrative area. It's important for a company, but it's not required for manufacturing a specific product. Now, the difference between administrative costs and financial accounting. Financial is focused on external users like the banks and clients, while administrative is focused on internal users like administrative employees, managers, for example. Administrative accounting is based on budgets and costs, while financial accounting is based on basic financial statements as balance sheet, income statement, equity statement, cash flow statement. Administrative one is focused on the future, while financial is focused on facts. Administrative provides information to evaluate a company by areas and departments, while financial let us view in a global way the results of a company. Now, I'm gonna talk about cost classification. The first one is associated with the function in which it is incurred. On this point, we can find the production costs divided in 3 items. The first one is raw material or direct material, those material needed in the production process. This is so important because thanks to that, we can create a specific product. We can create a finished product. The second one is the direct labor. It is the basic salary plus the social benefits and parenthetical contribution of those who directly transfer the product. Any product. It is the person required to transform the product, to create or to make this product. The other one is the indirect costs of application. Those required to produce and do not belong to the previous categories. That is, they are not direct labor or direct material. Example, depreciation of machinery and equipment, leases of the production plant and equipment, and direct materials, wages, and social benefits of the production supervisor. Functions in which it is incurred. On this point, we can find costs of distribution or sale. In this one, we can find freight. What is it? The costs required to transport a specific product or some products by car, by truck, by plane, by train, by crane, by ship, in any transportation. In this we can find costs of distribution or sale. In this added value that is generated in the process of taking the product from the company to the last consumer. Example, advertising commissions and freight, like as I mentioned before. Management costs expenses is the other one in the direction of control and operation of a company. Example, salaries of administrative staff, telephone, taxes other than income, and so on. The last one is the financial costs. These are related to obtaining funds for the operation of the company, include the interest paid on the loans. And now we can find costs focused on time function. In this fragment or in this section, we can find historical costs. It is a real cost already fulfilled that has an only advantage: the comparison of its result with the levels of sale to know the profits. The historical costs in a determined period of the year, for example. The other one is predefined cost. It is the cost that is determined before the start of the production process. It is a planning tool used to set production patterns and sales prices. The most well-known default costs are estimated costs and standard costs. The first one is standard cost, a quantity applied to a product based on a study of production capacity and or service, unit purchase prices, and the quantity demanded by the product or service. The other one is estimated costs, a first cut of what the costs are in the future of the product being produced, merchandise that is marketed, and service that is provided. It's more frequent than the standard, since its calculation is simpler. For example, when we make a product, a tangible product, we know the specific price of an ingredient. So this is an estimated cost thanks to marketplace, for example. Now the identification with an activity department, product, or process. In this section we can find two items: the direct costs and the indirect costs. The direct costs are lowered frequently. Direct costs, this is those identified with an activity, process, department, or product. Example, the salary of the maintenance department supervisors is a direct cost to this department, because the maintenance is necessary to make this product. The maintenance is necessary for machinery, and those machineries are needed to make some products. The indirect cost is the other one. They cannot be identified with an activity, process, department, or product. Example, the precision of the building of the company or the salary of the general manager with respect to the merchandise that it sold. Now the control occurrence of the costs is divided into items. The first one, controllable costs, when a person of a certain level has the authority to control a specific price. For example, the sales commissions, because a boss have this control to sell the guidelines to gain these commissions. On the other hand, we can find non-controllable costs when nobody have the authority to incur them, such as in the case of the depreciation of the sales manager's vehicles, since the cost is incurred regardless of any management decision. Now we can find this item or this section according to their behavior. It is divided into items. The first one is variable costs, the total cost that changes or fluctuates in direct relation to a given activity or volume. Example, raw material with reference to the number of units produced, commission of sellers in relation to the number of units sold, fuel with reference to mileage. It depends on the demand of the demand. For example, it depends because for example the demand requires a specific quantity, and a company establish or settle a specific volume of thanks to that. Now we can find the fixed cost remains constant within a given period and a relevant range of activity. The fixed costs can be increased by the increase in installed capacity. For example, purchase of machinery and equipment. Examples, manager salary, advertising expenditure in relation to the number of units sold. Now, fixed or discretionary costs. It is susceptible to be modified by directive decisions. Example, leases, salaries, staff training expenses, etc. The fixed or committed costs. That cost that cannot be modified by decision of manager because it obeys decisions made in the paths and structure of organizations. In this case, the paths is so important. The politics in the company, the cost structure made in the past. Mixed or semi-variable costs. They are costs that have a fixed and a variable component. Example, maintenance of machinery, even if there is no activity, and fixed maintenance costs it's always incurred. Public services, water, energy, gas, telephone, even if you don't not use the service. Other example of this is the commissions that I mentioned before. This is that of sacrifice incurred. We can divide it in these cases, in these items. Disbursable costs, opportunity costs, those incurred by making one decision instead of another, and costs for making decisions. Opportunity costs, it's the opportunity, is this option in which you give it up to realize or to do another action. Now we can find the break-even. We can find the fixed costs, the variable costs, and fixed costs plus variable costs it's equal to total cost. This is the purple line. Now we can find other line. It is the total incomes. When total costs crossed the total incomes, it is the break-even. This point exactly. For more information, you can visit these resources and this link in YouTube. Thank you so much. Have a nice day. And see you then.